Chapter 10, E5B, we are looking at the three depreciation methods for this chapter. The three methods include the straight line method, the production method, and the double declining balance method. So based on the information provided in this problem, I'm going to show you how to calculate the annual depreciation under each of the three methods. Let's first start with the straight line method. The straight line method, the equation annual depreciation equals cost minus residual value divided by useful life. The residual value is the amount that we believe we can sell this truck for when we are finished with it. The useful life is the estimated amount we believe this truck will provide a benefit for our company. The cost of the truck was $45,000, and then we will subtract out the $7,500 residual value. The residual value cannot be depreciated as it is an amount that we will receive when we sell the truck when we're finished. That is why we subtract it out. And then if we divide by the 5 years for the useful life, we come up with an annual depreciation of $7,500. The journal entry for this transaction would then include a debit to depreciation expense truck for $7,500 and a credit to our accumulated depreciation for our truck, which is our contra account, also in the amount of $7,500. When we use the straight line method, the annual depreciation remains the same. For the next 5 years, we would record the same journal entry, and each year we would depreciate $7,500. Now the production method is similar to the straight line method, only our useful life is based on the production. In this case, the number of miles we believe we can drive our truck. So we still take our cost minus residual value divided by useful life. However, in this case, our useful life is not based on time, it's based on miles. We then take that times the miles driven for each year. In this situation, we believe or estimate that this truck will last 200,000 miles. So if we take 45,000 minus our 7,500 divided by our 200,000 miles, and then take that times the 48,000 miles that it was driven for this year, we come up with an annual depreciation of $9,000. The journal entry would be similar to the straight line method. The only thing that would change would be the dollar amount. We will debit depreciation expense for our truck and credit the contra asset accumulated depreciation for our truck in the amount of $9,000. Now, unlike the straight line method, within the production method, it is likely that the annual depreciation amount will change each year as it is based on the number of miles that are driven in each year. For the third, we're looking at our double declining balance. The double declining balance is an accelerated method used. You will depreciate larger amounts in the beginning years and smaller amounts in the latter years. The first thing we have to do is to determine at what rate will we depreciate our asset. To calculate the rate, you will take 100% divided by the useful life, and because it is the double declining, we will multiply that by 2. In this example, we will take 100% divided by 5 years times 2 gives us 40%. The equation then is annual depreciation is equal to the rate times the carrying value. So let's take a look. For 2013, we will take 40% of the $45,000, which is our cost. In the first year, before any depreciation has occurred, the cost will equal the carrying value. And you may ask or be curious what has happened to our $7,500 residual value. The residual value in this method, unlike in the first two methods, is accounted for in the last year of use. So for 2013, our annual depreciation will be $18,000. 40% of $45,000 is $18,000. And then as the equation states, annual depreciation will be our rate, which is 40%, times our carrying value. Our carrying value as you can see here, is equal to cost minus the accumulated depreciation. So for 2014, we will only be taking 40% of $27,000. We subtract out the amount that has already been depreciated. So for 2014, we come up with an annual depreciation of $10,800. So for both years, 2013 and 2014, we will debit our depreciation expense and credit our contra account accumulated depreciation for the appropriate amounts.